Hello, and welcome to a special episode of the Upside Plus live on YouTube. Thanks so much for joining us. I'm your host, Emily Nuevo, and we are live streaming on YouTube right now, which means send us your questions and comments in the chat below, and we'll do our best to get to all of them today. Now, here at Fidelity Canada, we want to make investing easier for you. Over 2 million of you invest with us. So today, we'll share how our ETF lineup could boost your investment strategies, what top investing opportunities there are in 2026, and what major AI trends are making waves this year. But up first, we caught up with our sales team to talk ETFs and our all-in-ones. Okay, folks, get ready to diversify your ETF knowledge in a segment I like to call our ETF Minute Rundown. I have some sales folks with me here to test their ETF Basics 101. So let's see what they can do. 5 questions, 12 seconds each. Let's go. Start the timer. Define what an ETF is in simple terms.
For sure. So an ETF is an exchange-traded fund. So I like to think of it as a pooled group of securities, which can mean stocks, it can mean bonds, that are all grouped together sort of to create this one basket of securities. And that is what you get in an ETF.
Okay, fantastic. Now, how is buying an ETF different than buying an individual stock?
Yeah, buying an ETF is different because you get exposure to a lot of different asset classes, whereas in an individual stock, that is one type of exposure, so a lot more concentration risk there.
Perfect. Now, before choosing an ETF, what should an investor think of when it comes to their financial goals, timeline, and type of risk?
It's a great question. They should definitely think about how much equity they want, how much fixed income they want. Think of equity as your offense, fixed income as your defense, and you want to make sure you're diversified across regions, asset classes, and all the above there.
I like it. Okay, let's turn to all-in-ones. Who are our all-in-one ETFs designed for?
So that's the beauty of the all-in-ones, is that the suite has 6 different products ranging all the way from 100% fixed income all the way to 100% equity. So depending on what is your risk tolerance, we can slot you in across the different asset allocation levels. So it really fits for every investor, just depending on their risk type is which one is best for them.
Excellent. Last question. Do all-in-one ETFs carry the same type of risk?
They do not. So we range from, like we said, from 100% fixed income that could be low risk to 100% equity, medium risk, and they're very well diversified, like we mentioned, across different regions, categories, etc. So you can rest assured that you are protected on the downside very well with the all-in-ones.
Amazing. Okay, guys, A for effort. Great job. High fives all around. Thank you so much. Woo! Thank you. Such a fun time chatting with the sales team there. So they gave us the basic 411 on our ETF lineup, but let's take that a step further and expand on how exactly our all-in-ones can work with your investments. Here's our director of ETFs. I'm here with Andre Bruno, director of ETFs at Fidelity Investments Canada. Andre has over a decade of capital markets industry experience and is here to talk about market trends, ETFs, and more. Welcome, Andre.
Great to be here.
Now, Andre, before we talk about what's happening in the markets in 2026, let's quickly look back at 2025. What were the biggest highlights that stood out to you?
Well, certainly 2025 was an exciting year. There was a lot going on. There was, tariffs, geopolitical risk, a lot keeping folks in finance, busy day in and day out. What was very interesting last year and where we saw a big change in trend from year over year and even over a longer time period was this shift away from U.S. markets, U.S. equity markets to be specific. It was the first year in a very long time we saw investors focusing outside of the U.S. And that was reflected in a lot of the flows in the ETF space. In fact, it was the first year in a long while we saw more money flowing into international equities than in U.S. equities. And in fact, we've continued to see that trend starting into this year as well. So that was probably the number one biggest surprise for me last year, was just seeing that investor focus shift a little bit away from the U.S. and into more international equity markets.
Okay, so geopolitical risk, a shift, like you said, from U.S. into international. Are those the types of market movers and themes that are going to continue in 2026?
Yeah, certainly from a return perspective, international markets have been outperforming U.S. markets, and we saw that last year as well. So we continue to see that, into this year, into 2026, and the flows have also been similar. We continue to see folks, talking about ETFs particularly, we continue to see the lion's share of equity flows flow into international equity markets. U.S. markets are second, and our Canadian markets are in third there from a flows perspective. That is a trend that we're continuing to see, and I think there's a couple of factors in play there. So obviously, a lot of people have been overweight, U.S., particularly those growthy tech names. And, I think folks are starting to think about, how can I diversify my portfolio? There's, some risks on the US side. Tariffs are coming up once again. There's recent decision by the Supreme Court. A lot of tariffs got struck down. So there's a little bit more uncertainty around, what's going to happen with these tariffs and global trade, generally speaking. So again, I think investors are looking for, other areas and other opportunities in the market, and international markets is where they're taking a look right now.
Absolutely. So international markets, investors thinking about diversification. Now, ETFs can play a huge role in shaking up an investor's portfolio, helping it balance it out. In general, Andre, how can ETFs fold into investors' portfolio?
Yeah, I think there's been so much innovation in the ETF market over the last decade. Originally it was a very concentrated market, concentrated in index type products, so those passive products that track indices like the S&P 500, for example. And there's been so much innovation and growth that we've seen. ETFs like active ETFs come to market, smart beta ETFs come to market, and within those three categories as well. It is spanning kind of every asset class across the sun, whether that's, crypto, equities, fixed income, commodities. There's kind of an ETF that can, perform kind of any function in a portfolio. So whether you're looking for, a one ticket solution, set it and forget it, I want a particular asset allocation, I don't want to think about it, there's solutions for that. If you're thinking, I do want to diversify my portfolio, perhaps I want to look at international markets. There's a plethora of ETFs that can serve that. So there's ETFs that can serve that core portfolio function. There's ETFs that can help you express a certain view. There's ETFs that can help you, risk manage in your portfolio. For example, you may say, well, my portfolio is looking a little bit growthy. Maybe I want to, add some value for some diversification. There's ETFs that can do that for you. So all that to say is, whatever you want to do within your portfolio, there's ETFs out there that can help you achieve that.
Andre, our all-in-ones have been really appealing, really successful to our investors. Talk a little bit about that. We have actually over 50 ETF products in our lineup. So how can investors incorporate the all-in-ones or other ETF products to sort of enhance and monetize their portfolios?
Yeah, so the ETFs are, one ticket solution or asset allocation solution. So that's just a fancy way of saying it's a portfolio that holds stocks, bonds, and a little bit of crypto actually as well. So depending on kind of your investment horizon, your risk profile, what you want to achieve in your portfolio, we've got a suite of solution that kind of spreads that entire gamut of, all the way fixed income for those folks looking to be a little bit more conservative, all the way to an all equity solution, and kind of everything in between that adds both equities, crypto, a little bit of cryptocurrency, and fixed income there as well. So, for folks who are looking for, kind of a single ticket solution, kind of more of a set it and forget it, we'll do all the rebalancing for you within the portfolio. Those serve as a great core positioning in your portfolio. And then you may want to add satellite positions. You may want to say, I want a little bit more exposure to international, or I want a little more exposure to, US growthy names, and you can kind of bolt on yourself there. So again, it serves as a great kind of core positioning in the portfolio. We do a lot of the hard work under the hood for you. It's got a lot of building blocks under the hood for you, whether, as I mentioned, either fixed income or equity. And again, all the rebalancing is done for you in one simple one-ticket solution for you.
Andre, always a pleasure to have you in the studio. Thank you so much for your insights into the market and, of course, our ETF product lineup. Thanks again for being here.
Always great chatting with you, Emily.
So you just heard about the core elements of investing and what investment opportunities could be out there this year. Another topic that's shaping markets and sparking a lot of investor interest is AI. Joining us now to walk us through what AI could mean for investors is Vishal Chopra, an equity research associate who covers Canadian technology and healthcare here at Fidelity. Welcome, Vishal.
Thanks for having me.
Okay, our chat is still open. Our live stream is still going, so send us your questions. Now, Vishal, there's no doubt that AI is profoundly shaping our global financial markets, how people invest, our day-to-day. But how exactly is AI transforming industries today and just how we work and live?
Yeah, I think let's use investing as an example because it's something that I'm incredibly familiar with. AI is a great search tool. Previously, you had limited ability to search. You either have to use Google or you have to use Control F on your computer to go through documents. Now with ChatGPT, Copilot, other tools, those LLMs can actually go through the filings for you, pick up pieces of information that you want them to pick up, But I think also there is a coding impact, which is if you want to do very basic data analysis, but you didn't know how to code in the past, the LLM tools are great at coding. So if you wanted to ask a question such as how does weather impact a particular retailer's sales or a particular retailer's earnings, that might have been a pretty difficult piece of analysis in the past, but now it's becoming a much easier piece of analysis.
Absolutely. It really touches our day to day. And like you said, sort of the software side of things, the software programs. Besides that, Vishal, I mean, part of your job as a research associate, you're on the ground, you're going to conferences, you're part of meetings. Like, what are you hearing and seeing from AI related companies, and what opportunities are out there right now?
Yeah, I think on one side, you have the revenue generation side, which is if you think about each token as sort of a unit of knowledge, whoever is producing the tokens, primarily hyperscalers, are generating revenue today by renting out GPUs. But on the other side, you are seeing efficiencies, whether or not that's on the software side within R&D, because people are able to produce code more frequently, or even in anyone's day-to-day roles, a lot of the difficult parts of the work that maybe aren't the most valuable, but just take a lot of time, are made a lot easier via LLMs. If you think about it, an LLM can create maybe a basic financial model for you today. But a lot of the work of a research analyst is trying to figure out what a company is going to report in the future. That it isn't necessarily making easier, but the ability to build something that helps you forecast is made easier. So you can be more productive as a research analyst today than you could 5 years ago, but it's not necessarily job replacing, say.
Right, but definitely increasing productivity and efficiency. A question coming in here. So what are the biggest opportunities that you see are coming from the tech leaders or from companies using AI behind the scenes?
Yeah, I think you're going to see a lot more software produced over the next 5 years than software over the last 5 years. And I think there's going to be a significant difference in architecture over the next 5. Not only does software, I think, in general make people more productive, but I think everyone has dealt with the frustration of why does this software not work in this particular way? I really want it to do this. And now the ability to sort of add on extends and maybe personalize the software to something that works for you versus something that doesn't work for you is something that definitely will be a trend for the next 5 years. And I think the personalization of software is really exciting to see how that turns out and how that pans out.
For sure. The software side of it, the LLM side of it, definitely a trend. Where else are you seeing real world AI adoption, Michelle?
You're also seeing it also in customer service, and you're starting to see it broaden out into general knowledge work. The way that I would characterize it is for the last couple of years, you've had a lot of great software tools like Claude Code, that have really taken off, but those have focused on the coding use case. Just recently, you had Anthropic launch Claude Cowork, which is meant for general knowledge use. And I think beyond, call it the typical customer service where you're messaging a chatbot, I think over the next couple of years, you'll see the labs focus more on knowledge work versus just purely on coding. And as a result, you should see interesting vertical use cases show up for all jobs. But we're still really early. Still call it a month in from the Claude Cowork launch.
Okay, so still early on in those stages. Another question coming in, can you give us one simple everyday example that we might recognize in terms of AI and investors?
Sure. So I think when it comes to, for example, like improving productivity for investors, think about comparing two companies. Take Coke and Pepsi as like a typical example. Historically, if you really wanted to understand sales growth, you might have high-level information about sales growth that you get from a database. But right now, you can go into ChatGPT and you can say, go into the filings for Coke and Pepsi and figure out whether or not volume growth differs or figure out whether or not pricing growth differs. I think that's something that is a little bit unique because historically, if you think about having to do the work as an analyst or even as a layperson, you would have to open up each filing and go through it. But now it's willing to do the tedious work by just you asking a very simple question and following some very simple steps.
Okay. Now, a lot of investors watching on the line, and they see this huge AI bubble, growing. A lot of headlines there in terms of investing in AI. But what should investors be aware of when it comes to possibly the risks of AI? What should they be keeping top of mind when it comes to artificial intelligence?
Yeah, I think the risks of AI would split into three buckets. If you're investing in the hardware companies today, they're generating the most revenue, you really need to make sure that there's a return on the investment. While revenue is being generated today, I think hyperscalers in general are going to spend around $650 billion this year, as per their disclosures. That's about 2% of US GDP. So you need to see a meaningful amount of revenue generated as a result of these investments. I think if you're looking beyond that and you're looking at AI software, I think what you need to look at is two things. One, are the software companies AI washing? Are they releasing an AI feature that's not actually AI? But number two, some software companies today are releasing these new AI products, but they're either not monetizing them or they are monetizing them, but they're selling $1 for 50 cents. So the gross margins on that revenue are really low. So I would say that's really the two risks that I would pay attention to is on one side, how do we get a significant amount of revenue being generated? And on the software side, let's make sure that software companies are able to actually monetize these AI features and aren't just pricing at negative gross margins to drive growth.
Now, Vishal, as we continue to roll along here in 2026, what do you think are going to be the biggest AI trends making waves this year?
That is a really good question. So I think beyond personalized software, I think what you're going to see is you're going to see a change in how search works. Right now, you've seen, call it like the typical chatbot. You're either using a chatbot or you're using Google, for example, to search. I think there's a lot more data that's out there that isn't necessarily LLM accessible, and that will need to change. And you're seeing some interesting startups out in San Francisco start to figure out of all of the web, how do we make sure that the data is easily accessible to LLMs for search? I think beyond that, what you should really look at is like, what are the most difficult parts of the job that aren't necessarily are time consuming,
Right.
but aren't necessarily something that takes a lot of brain power, for example. And I think you're going to see the trend towards people systematically tackling those parts of the job, call it block by block, until those parts are automated as well.
Vishal, thank you so much for coming into the studio, sharing your insights. Really appreciate it.
Thanks for having me again.
Now, before we let you go, our first ETF pop-up of the year is just around the corner. So here's a sneak peek at what you can expect to see and hear.
Fidelity has an ETF for everyone. We're trying to create a fun and engaging space where you can collect some free stuff, but also learn about our products. We've had so many different types of people walk into the space. We're seeing families, we're seeing Gen Zs, we're seeing parents, and even grandparents.
It has been such a fun event. We have people from all over Toronto coming in and asking us, what is happening here? Why is investing so much fun? We have people saying like banks aren't doing this, our competitors aren't doing this. We need more of this for young people.
We're here in the ETF lounge, just chilling. What do you think about this whole event? What do you think about Fidelity just making investing cool?
Yeah, I think this is the perfect way to talk to Gen Zs. Even I learned so much about ETFs today that I probably would have never known if I didn't come in here. Plus, cool hat.
Investly is a new investing app we just launched last year. So we're here just having conversations with investors. We designed the app for first-time investors. So it's really, if you don't know where to start, you have no idea what an ETF is, you don't know what investing is, that's who Investly is for.
Emma, if you can describe investing in 3 simple words, what would it be?
Okay, empowering, inspiring, and honestly simple. We have so many great products out there. We want to let you know that, Fidelity Investments is your ETF BFF. That's kind of the whole idea around it. We want to make sure that our ETFs feel approachable, accessible, and that there's no real intimidation when it comes to getting started to investing, and especially getting started investing in ETFs.
So proud of the team that put it together. It really is our younger employees that organized this event from start to finish. I think it's fantastic.
This event is just, years in the making, really, and we're all so proud of how it's come together.
So remember, ETFs, your BFF. We want to make investing simple and approachable. Find out more at fidelity.ca and see you at the next pop-up.
Our next ETF pop-up will be in beautiful Vancouver, British Columbia, a 2-day extravaganza starting Saturday, March 28th to Sunday, March 29th at the Slate in downtown Vancouver. It will just be one of many ETF pop-ups planned for this year across the country. More details to come on our social channels. Hope to see you there. And thanks for joining us on the Upside Plus. Until next time, I'm Emily Nuevo.